for us now, this is not a short game. We are in the automotive industry is long-term planning. You have to invest now for the next 10 years and going forward.
All EV car manufacturers were taken aback by Volkswagen's CEO's latest declaration, which they fear might cause massive problems for Volkswagen and the whole EV sector, costing hundreds of millions or even billions of dollars. There seems to be a hiccup in Volkswagen's plans to go electric. A major decision was made by the corporation, and it may spell the end for EVs. But how did the German conglomerate get into this predicament? The Volkswagen Group is slowing down the manufacturing of electric vehicles, a move that has stunned the EV sector and raised worries about the future of the German automaker. How did a corporation that seemed so committed to electrification suddenly shift into neutral? And what might this indicate for the EVs industry as a whole?
On the flip side, there is a conflicting signal in terms of the demand for EV, and that's coming to us from Volkswagen. There was a report by a German newspaper that the company is going to reduce production of one of its electric vehicles, the ID.4 compact SUV, also the ID.7 sedan, at one of its factories in Germany over the next couple of weeks, and that's because of weak sales.
Once a titan in the automotive industry, Volkswagen has faced formidable challenges against Tesla's relentless dominance in the EV market. The contrast in June's sales figures is staggering, with Tesla boasting an impressive 28,000 vehicle sales compared to Volkswagen's meager 12,000 in China alone. This came as a surprise, as the company had previously been ambitious about its EV strategy, with the ID series at the forefront. However, the numbers paint a grim picture, with Volkswagen falling 30% short of its projected revenue. Demand for EVs is on the rise, with Tesla reporting an 83% year-over-year increase in sales for the second quarter of 2023, despite customer complaints that Volkswagen's offers are inferior. Could it be that Volkswagen has fallen short of what today's EV buyers want? Why might Volkswagen be having trouble making ends meet? The Volkswagen Corporation blames issues outside its control, such as declining government subsidies. Gas prices are going down, but electricity rates are going up. That can be because of the business's inefficiency and excessive production expenses. This glaring disparity has raised serious concerns about Volkswagen's ability to regain lost ground and establish a strong foothold in the rapidly expanding EV sector. As we analyze Volkswagen's lagging performance, let's take a detour and shift the spotlight to the Chinese market, a critical battleground for global automakers. Traditionally, Volkswagen has enjoyed significant popularity among Chinese consumers. However, during the first half of the year, the German giant found itself lagging behind, ranking only among the top 10 BEV manufacturers in China. This reality check was a stark wake-up call for the company, signaling a need for strategic adjustments.
Volkswagen had high hopes for sales of its latest electric vehicles in China, but it looks like the German giant just got a reality check. Industry experts say sales of the new ID models have been slow to get going. Consultants LMC say two new ID.4 cars shifted just 1,213 units in May.
Beyond sales figures, Volkswagen's financial health has experienced a substantial plunge. First quarter profits nosedived by a staggering 31% to 5.7 billion euros, raising alarm bells within the organization. Although sales revenue showed a promising 22% rise, driven by a recovery in the European and North American markets, the shrinking foothold in China remains a pressing concern. Acknowledging the gravity of the situation, Volkswagen's leadership has launched an ambitious strategic plan, aptly named Accelerate Forward, the Road to 6.5. This program is more than a mere cosmetic facelift. It is a comprehensive transformational effort aimed at enhancing profitability to an impressive 6.5% by 2026. The plan revolves around driving efficiency improvements across the company's passenger car brands, streamlining operations, and slashing costs to pave the way for sustainable growth. As Volkswagen is aiming for simplification and focus, central to Volkswagen's strategic turnaround is a bold decision to simplify its approach to EVs. Rather than maintaining an exhaustive range of models and variants, the company has charted a new course focused on maximizing profitability through targeted product offerings. This strategic shift from a broad portfolio to a more streamlined lineup reflects Volkswagen's commitment to adapting to evolving market dynamics. Some may view this move as a departure from the traditional automotive playbook, but it underscores Volkswagen's determination to prioritize profits and cash flow while ensuring the company's long-term financial stability. By concentrating on key areas of strength, Volkswagen aims to optimize production and capitalize on the surging demand for electric mobility. To fully grasp the magnitude of Volkswagen's uphill battle, we must acknowledge Tesla's unyielding dominance in the EV arena. Despite facing occasional setbacks and controversies in China, Tesla has consistently managed to bounce back and outperform not just Volkswagen, but the entire automotive industry. Selling an impressive 386,000 BEVs in the first half of the year, Tesla's global success is nothing short of awe-inspiring. China, with its booming EV market, has emerged as the epicenter of the automotive battleground, and Tesla's remarkable sales figures in the country have left competitors trailing. As Volkswagen grapples with fierce competition and local consumer preferences, Tesla's ever-expanding market share presents a formidable obstacle in their quest for resurgence.
Volkswagen is likely to double sales of its ID battery electric vehicles in China this year. That's according to the German carmaker Tuesday. The ID series is the central focus of VW's electric ambitions in the world's largest auto market.
In the face of these formidable challenges, Volkswagen is not backing down. The company has harnessed the spirit of innovation and adaptability, paving the way for a transformative journey into the electric future. The Accelerate Forward, the Road to 6.5 program represents more than just a strategic plan. It embodies Volkswagen's unwavering commitment to shaping the future of mobility. Through the program, Volkswagen accelerates efforts to increase efficiency, invest in cutting-edge technologies, modernize production facilities, and foster a culture of innovation. This strategic roadmap is poised to secure sustainable growth, spearheading the transformation of Volkswagen into a dynamic, electrified powerhouse. Volkswagen's quest to catch up with Tesla in the EV market is a tale of resilience, adaptation, and determination. While Tesla's dominance remains a formidable challenge, Volkswagen's strategic turnaround and laser focus on profitability signify a seismic shift in the company's approach. The road ahead may be challenging, but with a clear vision and unwavering commitment, Volkswagen is determined to reclaim its position in the pantheon of the auto industry. If you want to stay in the loop on all things EV, don't forget to hit that thumbs up button and subscribe to our channel for more exhilarating updates from the automotive universe. Let us know your thoughts in the comments below. Do you think Volkswagen can make a triumphant comeback? Thanks for watching, and until next time, happy driving!